Hey everyone, this is Dimitri Pragmatic with MarketChameleon.com. In this video, I wanted to talk about something that's very popular with options traders, and that's trading biotechnology stocks around catalyst events. And over here, you see this report here with a bunch of potential catalyst events and a list of them. And what we're talking about here is that usually what you see is traders trade around earnings, because when a company releases earnings, you'll see the stock move up or down in reaction to that announcement. Well, biotechnology stocks have, besides earnings, they have other events that can make the stock make really big moves. And as we could see here, here's a list of potential events for different stocks, like clinical trials, phase 1, phase 4. You could see this. They also have conference calls, industry healthcare conferences where they could reveal very important data, investor events, PDUFA meetings, FDA approvals of drugs. So when these events occur, you could see very big moves in the stock. Sometimes they could be 30, 50, even 100% moves. And these catalyst events attract options traders. Now, of course, unlike earnings, a lot of these catalyst events, they don't happen on a regular basis, quarterly, and really sometimes it's even hard to find when that next catalyst event is. So you're going to have to go compile that information from press releases, company website, other government websites. So you'd really have to compile it and get into a list, and that's what we're doing over here. So you could see upcoming catalyst events with the expected dates, and even those dates you kind of have to regularly check up on them because they could change. Remember, these are just studies that they're doing and data that they're collecting and results, and they could always push them either forward or backward. But these are the estimated dates over here. This over here is the different clinical trials. So right now we see a bunch of clinical trials, the symbol here, the market cap of the stock. And next to it here, what we see is this is the option expiration, the closest option expiration that will cover the expected event with the open interest. And here is the implied move based on the straddle. So here we see this stock, AZN, it's expected to come up with clinical trial results May 1st. So we see the May 8th expiration, and that's implying a 3.5% up or down move from today's price by expiration. And one way to kind of see, well, how big of a move is that pricing in relative to what is the stock on average move up or down in the same time period. So let's say there's 10 days to go to expiration. So here in the last 6 years, we see that on average, the stocks tended to move 2.3% versus the implied move today of 3.5%. So this tells you here that if we take the ratio of the implied move versus the average historical move, it's 1.5 times higher. We also put in the last 6 years here what the maximum move is over that same stretch of a period. So it's 12.3%. So you could kind of see that, and this is the ratio of the implied move versus the max move. So you could see here that the market isn't expecting one of its most extreme moves it did in the last 6 years, but this gives you kind of an indication based on a historical level, how much premium are they pricing in for this upcoming event. Now, of course, sometimes the premium might be very low and they might not be pricing in a big move, and that potentially you have to do your homework and make sure the event's coming up and kind of figure out, can this event, the data that's going to be revealed, make a really big impact on the stock price. And then see if that straddle is potentially undervalued. So let's just take a look over here. So here you see implied move versus average move. I'm going to pick a ratio below 1. So here, what I'm looking for is, below 1 over here. So here we see a bunch of events coming up, and for this one in particular, let's just take the first one. The implied move is 6.6%. That's what the straddle is implying. Historically, the stock over the same stretch of period in the last 6 years has moved on average 7%. So here the straddle, at least for the based on the historical average, looks a little bit underpriced. Over here, 0.9. We could see here that in the last 6 years, the stock has moved as much as 33.6% over the same stretch period. So this, if anybody looking and shopping around for potentially undervalued straddles, this is one way to start to create a list and then kind of do your homework and see what is this study about. Historically, how did stocks move around these types of studies? And here you also have the open interest. So this lets you know how much open interest in the contracts there is on that expiration. So if there's a lot of interest, a lot of betting going on, you'll see a high open interest. This one here, there's not that much. So not that many people are paying attention to it, or at least trading around that event right now. Now, if you're looking for a very high move, then we'd go the other way and show me implied moves where the implied move is above the historical average. So you could go over here. We could also just kind of sort by the highest and lowest here. Like that's 3.5 times the average and so forth. So this lets you narrow down your list of biotechnology stocks that are expected to have some type of an event upcoming. You kind of can look up when that expected event is, match it up with an option expiration, and then compare how those options are lining up really quickly and start making your decisions. But really what's important is kind of having a consolidated place to go and have a quick start to doing your research. Hopefully this was helpful. See you guys in the next video.